Hey there, it's Mike Shunky with Berkshire Hathaway Homes and Shift One Properties in Scottsdale, Arizona. I was working on a fancy video, YouTube video about some of the news today, but I've got to run out, and that was taking too long. And I'm more comfortable talking to you live, so we're just going to wing it. Anyway, I'm sure you all saw the market headlines today, the stock market and bond market. Had an inflation number come out this morning, CPI, 8.3%. Had a rough day in the stocks and the bond markets. You're going to see the headlines. You're starting to see them. Mortgage rates rising, housing recession. Well, read into it further. Read into it a little bit further. The CPI in the markets today just means that the Chairman Powell and the Federal Reserve Bank are going to be a little more aggressive. They've been telling us that for 6 months, that they're going to be aggressive with the Fed funds rates. Fed funds rate does not directly affect your mortgage rate. Mortgage rates closed about 6.28%, up about 6.28% today, up about 50 basis points. But not because of the inflation rate. Mortgage Bankers Association also came out this morning and said that they are lowering their mortgage credit availability by 50 basis points. They're tightening up the credit market. The government, during the pandemic, went out and underwrote all the mortgage-backed securities. They've got a lot to unload and put out into the market. The banks aren't quite sure. It's risk-reward. They aren't quite sure where this economy is going to go. So they're tightening up. They don't want to take the risk on the mortgage-backed security or the bond market. So that's why mortgage rates went up today. How does this affect housing? Well, it shrinks the pool of buyers that are qualified to buy houses. You would think if that pool shrinks and there's fewer buyers, supply, demand, you would think that that would affect prices. Well, normally that would be okay, and it would be true if you have adequate supply and demand. I just checked MLS a little bit ago. There's 12,000 single-family homes available in Maricopa County. That number should be about 20 or 25,000. There's just not the inventory. I've got a stack of buyers looking for places. There's not the houses out there to buy. And I don't think they were going to. We saw a little rush in the beginning of August, end of July, the beginning of August. But if you're in a house right now and you have a 3% mortgage, why would you sell that house unless you had to? Why would you get out of that 3% mortgage and take on a 6% mortgage? I don't see, except in Scottsdale here, some tourist areas where we have a lot of second homes and vacation homes. As the stock markets drop and their investment portfolios drop, they tighten up on their wealth and they don't feel as wealthy, I guess. So they sell assets that they've made money on. If you bought a house in the last couple of years in Maricopa County, you've made money on it, and you've done very well. You're going to pay capital gains if you sell it, but that's okay. I'm okay with paying taxes. I like paying taxes because that means I'm making money. So I was talking to somebody this morning, and I've got a couple clients, they're waiting for prices to drop. And you hear it on the news. I don't know why I jump into Twitter sometimes, and I had a little Twitter back and forth with somebody that says the housing prices are going to drop. We had a discussion this morning. Mortgage rates from January to now have increased, 3 or 4%? Housing prices need to drop 30% or more to offset that monthly payment. So your $1 million house, it's just typical in Scottsdale, in this area, your $1 million house has to become a $700,000 house. It's It's not going to happen. Your $500,000 investment property has to become a $350,000 investment property in order to make up for that mortgage rate difference. I don't know if you've looked for a $350,000 house in Scottsdale or Maricopa County lately, but it doesn't exist in Scottsdale, and there's not a whole lot of people that want to live in a $350,000 house in Maricopa County. But if you want, we'll be happy to help you find it. Anyway, prices are not going to drop 30%. Prices are not going to drop enough to offset the increase in mortgage. Now, if you're paying cash, that's a different story. Historically, you're going to make 8%. The last 2 years, we've made 20, 30% on housing. Fantastic, unheard of, never going to happen again. We'll get back to that 5, 8, 10% increase in property values. It's not going to go negative. You're not going to lose money on your house or your investment property. Commercial and land interest rates are even higher. So with mortgage rates, it's 30-year fixed, 20% down, 6.28 today. That's significant. You know, your payment's over $2,000 more a month on $1 million house than it was in January. I don't care how much money you have. That's a significant chunk. $2,000 a month. Can you lease a Ferrari or a Lamborghini for that? Maybe not, but maybe close. So if you're waiting, prices are just going to go up, and there's no indication that rates are going to drop. Of course, I want a disclaimer. I cannot predict mortgage rates. I did work in the interest rate derivatives market for a long time in Bank America, with Bank America and Bridgewater Associates in Chicago and New York before coming to Arizona full time and jumping in the real estate market here. It was a while ago, but yeah, there's no indication that interest rates are going to go down. And if they do, you just refinance. That's not a problem. Housing prices are going to continue to go up, not 20 or 30%, but 8 to 10%. So if you're waiting till December or January to buy a house, it's going to cost even more than right now. So if you're looking to buy, I'd jump in. It's a good time. It's a good time. There's a few more on the market. Typically, Thanksgiving to Christmas, everybody takes their house off the market. So you're going to have less choice then. Anyway, if you have any questions, call your mortgage broker. Call one of the 92,000 realtors that are now licensed in Arizona. If you like me, call me. I hope you like me. Otherwise, you wouldn't be watching. But yeah, just call your mortgage professional, call your realtor, get the real news. Don't listen to the headlines and the doom and gloom. Overall economy, that's a different story. That's a conversation for a different day. But housing, you always have a housing expense. You need to live somewhere. If you're renting, that's a variable cost. If you buy, that's a fixed cost. 30-year mortgage, that's your fixed cost for 30 years. Unless you refinance and do even better, why wouldn't you just set that in your budget and be done with it? It just makes financial sense. They always say if you want to create family financial wealth, do it in real estate. It's funny, I see a lot of investment properties and commercial properties that have been held. You see it transfer family member to family member to family member, and they just manage them. It's free money for your kids and your grandkids and their grandkids. And like I said, you always need a place to live. You always need a roof over your head. So I hope that all makes sense. I kind of just belted it out real quick. Give me a call, 203-733-5877. Yes, that's a Connecticut number, but I'm here in Scottsdale. Email me, whatever, message me. I'm here to help. And that's it. Hope you all have a great day. Be smart, be safe, and I got to run. And We'll talk to you soon. Bye.